analysis. We only look at technical analysis. Technical analysis, we said it's like looking at charts and predicting, something like horoscope reading. And when we were discussing that, I gave you a simple sum about the rabbit family, and today we call that Fibonacci numbers. These kind of simple technical charts will make predictions. And some of these manipulators artificially create such technical analytical bases and start to predict this particular share will go up to this level. It has no fundamental value. Now, for an example, the reef, blue diamonds, even Lanka cement, these shares were manipulated without any fundamental reason. A lot of retailers got into that, purchased shares which have never declared dividend and loss-making shares without looking at the fundamental values. They never looked at financial statements of these companies. Instead, they just read some articles published in newspapers, and they looked at technical charts published by certain individuals in certain websites and started purchasing shares, believing you can easily double your investment. Now, one interest of many investors is to double, at least grow 2 times. Your capital should be grown 2 times within a very short period. I have given you a magical number 72. Okay. So if you divide 72 by the interest rate offered by the market, you will get how many years it will take to double the initial capital you have invested. Now at this rate, let's say FD, fixed deposit rate is 5%. It will take almost like 15 years, 14 plus years to double your investment. But CSC is showing maybe within 1 month, you can easily double your investment. Therefore, a lot of people who comes to know these facts very soon start to buy shares without knowing what they are really buying. Okay. Then there are inside trading, inside traders. Last week we talked about inside trading, and I said it's illegal. Have you heard about a person called Raj Ratnam? Say yes or no. An investor by the name of Raj Ratnam. Say either yes or no. Okay. Right. There is a book called titled Apprentice of a Billionaire. Rise and Fall of Raj. Okay. So I'll take some time to discuss these so you will get a very good understanding of what is insider trading, why it is illegal, before we move into primary dealers. Now, Apprentice of a Billionaire is written around the story of Raj Ratnam. Raj Ratnam is a Sri Lankan who was born in Jaffna and migrated to USA. And he started a fund in USA known as Galleon Fund. So he was an investor and he started investment fund known as Galleon Fund. Galleon Fund was continuously performing better than many other funds. And even in 2008 financial crisis, still he was making profits. When almost all the investors found it's extremely difficult to make profit in 2008, here comes Raj Ratnam, who is making good profits amidst of this crisis. Very soon, American FBI was behind this guy. If all your deals end up in super profits in a stock exchange, either you're a genius, or you're the number one criminal, white collar criminal. Now, FBI was looking into his records, all possible records, but they could not prove he as an inside dealer. I think we talked about inside dealer, someone who gets price sensitive information before the market is having inside information. If he makes decisions on investments based on information which are not available to the general public at that moment, he's an inside dealer. FBI was suspecting whether Raj Rajaratnam is an inside trader. They had good reasons. When you are in USA, whether you are from Sri Lanka, Bangladesh, Pakistan, or India, you are called Indians. Just by your appearance, you are known as Indians, not as Sinhalese, Muslims, or Tamils. So you are Indian. That's all. And very soon, these Indians would mix up. Most of the Silicon Valley companies, the IT-related companies, CEOs are Indians. Therefore, FBI was thinking Raj Rajaratnam is getting first-hand information from CEOs or the top-ranking corporate management members of Silicon Valley companies. Raj Rajaratnam was purchasing most of the Silicon Valley companies just before a newsworthy announcement comes to the market. For an example, if X company is going to buy Y company, immediately Raj was there purchasing the shares. When the market comes to know that, he sells at a huge profit. That has been taking place for a long time. Whenever you get price sensitive information, it seems Raj has got the news earlier. Right? So he's neither a fundamental analysis nor a technical analysis. It seems he's a pure inside dealer. It is illegal, but there is no way to prove it. Therefore, FBI was first tapping his mobile phone. They found he is not having a single call taken to any of the CEOs of these leading companies. It took some time, and finally FBI somehow managed to put CCTV or the certain video recorders top of fax machines of these companies. Because almost all the announcements are faxed to the respective regulator, SEC, Securities Exchange Commission. It seems before a particular announcement goes to the regulator and the stock market, Raj gets the information. They soon found it is not the top rankers, but the office assistants who just first fax the information to Raj. And after some time, they fax it to the relevant respective departments. These departments are, state-owned departments are a little bit lethargic. They take further time to publish them. That time is enough for Raj to purchase as much as possible. And with these wiretapes, he was taken to court and he was found guilty, prisoned. So that is the story on insider dealing. When general public is not aware, those who have access to sensitive information can make unnecessary, unnatural profits out of ignorance of the general public. That is illegal and punishable. So in US, Raj was put into prison. Right. So that's one story I want to tell you. Then I'll give a simple sum for you to solve just to say a story. take a piece of paper and write this number 3599. Okay. Now this is one problem which I face when I don't have a physical class. In a physical class, I can show this and I can look at how you are looking into this number 3599. Okay. Now don't log on to any internet, but you can use any kind of calculator and tell me just a simple thing, whether this is a primary number or not. You know what is primary number? A number that can be divided by number 1 or by the same number. If you divide it by any other number, you won't get a full answer. So that is a primary number. Now I'll give you 3 to 4 minutes. Tell me whether this is a primary number. After that, I'll link that to another story. You can use calculators, but don't use internet or any other source. Just tell me it's a primary number or not. Now my problem is I don't see what you are doing. If it's a physical class, I know. Yeah. Others, I'll give 4 minutes. Very good. Others. Right. Now, why do you say it is not a primary number? From those who say no, tell me, why do you say it's not a primary number? You first divide it by 2. That's it, because it is not divisible. That's why you call it is not a primary number. Now, how do you divide it? 3599, first you divide it by 2. You can't get a complete answer. There are many decimals at the end. Then you divide it by 375. Okay, right. Now, this is from a novel, Octopus. A Russian who comes to America is a super class computer programmer. And the bank Goldman Sachs is interested in having a super computer programmer who can read charts. So you can do a lot of technical analysis in investments. So in this interview process, this particular Russian is finally put into the CEO, the last interview. In this last interview, the CEO gave him just 2 activities. One is to make a Rubik cube within less than 1 minute, which he did without any problem. Next, he was given this number, 3599. Is it a primary number or not? Okay. Now that shows the difference between an average thinker and someone who can think differently. He just look at the number and immediately something happened in his mind. What is that? Am I correct? 3599 equals 3600 minus 1. Am I correct? Say yes or no. 3006. Yes. 3600 minus 1. Okay. Right. Now you got it. Tell me the pattern. Is it a primary number or not? 3599 is equals 3600 minus 1. Is it a primary number? Okay. Means what? 60 squared minus 1 squared. Okay. Another bracket. 60 squared. 60 squared minus 1 squared equals 60 minus 1, another bracket, 60 plus 1. Means what? If you 60 plus 1 is 61 and 60 minus 1 is 59. Now, it's 3599. Is it a primary number? What will happen if you divide it by 61? What will happen if you divide it by 59? Got it? It is not a primal number. Am I correct? 3599 can be divided by 1, can be divided by the same number, or by 59, or by 61. You get complete full answers. Right? Within a fraction of a second, this particular computer programmer nailed it, and he was given the job. Means what? Not every person can read charts. Those who can read charts fast can predict future fast. That's one thinking. Okay. Now we talked about Rothschilds. Okay. Your leisure time, just Google or go to Wikipedia and check about Rothschild. Now today we are going to talk about primary dealers. So before we enter into primary dealers, let me tell you the story of Rothschilds. Rothschilds in German means red shield. Okay. So there was a family of Jews living in Germany, Frankfurt. The father had 5 sons. Now those days, Jews cannot get into government jobs. They cannot purchase lands. They cannot go into this, clubs, nightclubs. They cannot move out of their living spaces after 6 p.m. That was the rule. Jews were ethnic minority living in European countries, and the areas where they lived were known as slum houses. Yes, they were actually living in slum houses, and they were separated by walls. Their slum houses areas were separated by walls, and they cannot walk at night. And whenever they go out, the males have to wear a red cap on their head, so everyone knows there goes a Jew. The difference between Jew is they can charge interest, which was prohibited to the rest of Christians living in Europe. The only people who charge interest by giving loans were Jews, and no one else did that job. That's against their way of living, but not for Jews. Very soon, Jews who cannot construct huge buildings, who cannot go out and spend their earnings by gambling at nightclubs, accumulated huge wealth, but still living in slum houses. Their main business was loans, gold owning, forex. So they were the bankers living in slum houses. In a particular moment, the father told his sons, "You sons must go into 5 different cities of Europe and start banking in each of these cities and get connected." So it's the very first multinational bank. So the sons went to London, Vienna, Paris, one other city, and one son remained with the father at Frankfurt. And they were connected to each other. Those days, the European nations were fighting each other. Napoleon Bonaparte was in France, and he was fighting with UK. The Rothschild banker in Paris was supporting Napoleon Bonaparte. The Rothschild son who is living in London, known as Nathan May Rothschild, was supporting Wellington, Prince Wellington. That's the UK ruler. But the family was connected, even though they support different political views, political parties, their business is one. In one occasion, the Napoleon and the UK were having a fight, a war. No one knew who is winning the war. Nathan May Rothschild came to stock market. By that time, he knew UK has won, but no London citizen knew that they have won the war. Nathan May Rothschild came to the market. He started selling all his investments. Everyone thought UK has lost the war, and very soon the Napoleon Bonaparte and the France will invade UK. That is the end of their investments, and everyone started to sell. Last minute, Nathan May Rothschild purchased all the possible shares, and he became the biggest shareholder of Bank of England. Okay. And Nathan May Rothschild made a superb statement after that. He said, "I don't want to be a king, but I want to be the money supply of the government." Today we are looking at primary dealers. Who are the money suppliers? Okay. Right. Now, I told you a Rothschild, a grandson of this family, is now interested in investing in Colombo Port City. Okay. Now on, our subject today, primary dealer. First, we'll look at who they are. Primary dealer is a firm that buys government securities directly from government. Okay. Now, treasury bills, treasury bonds are government securities. There are primary dealers. The first deal, primary deal, they are the people who have the authority to purchase for the very first time when the government issue. Then they can sell it in the secondary market. That is their business. So primary dealers are known as the market makers for government securities. Primary dealer is a firm that buys government securities directly from a government. The intention is to resell the securities to others. Now the primary dealer is buying for the very first time when the government issue securities. When treasury bills are issued, when treasury bonds are issued, not everyone can directly go and purchase it from government. It's purchased by primary dealers. What they do with these securities, are they keeping until maturity? But their intention is to sell it back in the secondary market. The intention is to resell the securities to others. So you call that secondary market. Act as a market maker for government securities. Government need money from time to time. So it is said these Rothschilds were very happy whenever a government is declaring a war against another country or another party. Because the moment you go into war, you need more money than earlier. So you need a money supply. So government is printing a paper and putting it into the market. So that is the treasury bill or the treasury bond. And there must be a certain set of people who are ready to buy that and give the government money. And the government will pay interest. That is the job of primary dealer. Act as the market maker of government securities. The government may regulate the behavior and number of its primary dealers and impose conditions of entry. Yes. There are conditions of entry. Means what? It's not pure competitive market. It's a market where entry barriers are there. Therefore, primary dealers, the number is not huge for primary dealers. Strictly, very few primary dealers do this business, and it's profitable for them. They purchase from the securities from the government and resell them back to the market or the general public or to other investors. With that, they keep a profit margin. They just buy and sell government securities. You have heard about bond scam in Sri Lanka. Similarly, there was a bond scam which became popular in South Korea as well. So whenever government issue bonds, the primary dealers buy them. And they ensure government gets the right amount of money. and they resell the same bonds to the general public and make a profit out of that. Some governments sell their securities only to primary dealers. Governments that use primary dealers include, okay, so almost everywhere. Today, you see governments use primary dealers to provide money for the government. So this is why Nathan May Rothschild said, I don't want to be a king, but I want to be the money supply of the government, which they actually did. The objectives of primary dealer system. Okay. Now, government need money from time to time, and they issue securities. These investors will subscribe to that and provide money to government. Now, the objective: to strengthen the infrastructure in the government securities markets in order to make it vibrant, liquid, and broad-based. To ensure development of underwriting and market-making capabilities of government securities outside Reserve Bank of India. Now, this is from Indian one. Outside the central bank, so that the latter will gradually shed these functions. Right. So there is a market security that will be sold out the central banks, so that the latter will gradually shed the functions. To improve secondary market trading system, which would contribute to price discovery, enhance liquidity and turnover, and encourage voluntary holding of government securities among a wider investor base. Even though there are few primary dealers, they can get hold of these securities and sell them to a wider variety of investors. So that's another objective. To make primary dealers, hereafter PD means primary dealers, an effective conduit for conducting open market operations. Okay. Now, open market operations means issuing treasury bills by offering an interest rate. Okay. Now, let's assume a very simple example. In a country, you have only one gold coin. Means what? Money supply is one gold coin. This country manufactures only one thing, just one pen. So you have only one gold coin and one pen. Okay. So money supply is equal to here what they can offer to buy. So the only thing available in the country or the GDP is this one pen. What is the price of a pen now? All what you can offer is one gold coin. All what you can buy is one pen. Now, what is the price of a pen now? You have only one unit of money, one gold coin. No, there's only one product you can buy, one pen. What is the price of a pen now? One gold coin, one gold coin. Very good. Now that is price stability. You manufacture only one pen and you have only one gold coin. Price of the pen is one gold coin. Suppose the country somehow found another gold mint and they now minted another gold coin. Now, how many gold coins in the system? What is the money supply now? 2. Money supply is 2. What is the price of a pen now? What is the price of a pen now? How much can you offer for the pen now? No. Money supply has gone up, so you can demand more. Okay. Now, right, one pen, 2 gold coins, price has gone up. Okay. So we call it, what do you call this situation now? Price has, very good, 2 gold coins. What has happened to price of the pen? Gone up or down? Gone up or down? Gone up. What do you call this? Price is going up. What do you call this? Price has gone up. What do you call this? Inflation. Very good. Now, what is inflation? When the national output, when the money supply increases without commensurate rate of national output, that is inflation. When money supply goes up without commensurate national output, that is inflation. When money supply goes up without commensurate increase of national output, that is inflation. Okay, money supply has gone up without increasing of national output. Okay, so inflation has taken place. Now we want to remove this inflation. We call it curb inflation. Now you want to curb inflation. Means what? You want to reduce the price of this pen back to 1 gold coin. Tell me 2 ways of doing that. Now we want to curb inflation. What is that? Now we want to ensure once again the price of a pen is 1 gold coin. Tell me 2 ways of doing that. Tell me 2 ways of curbing inflation now. You have an equation, this side, that side. Tell me 2 ways of doing that. Very simple thing. Tell me, you have 2 ways. Price has gone up. Now you want to go back to the earlier situation. Okay, tell me in very simple language. Tell me that in very simple language. I want to go back to the earlier situation. Okay, the earlier situation is 1 gold coin equals 1 pen. Very good, very good. Now to go back in earlier situation, instead of having 1 pen, produce another pen. So 2 gold coin equals 2 pen. 2 equals 2 means what? If you divide the both by 2, you get 1 equals 1. You go back to the earlier situation. Very good. But there is another way. What is that? There is another way. What is that? Sometimes it's difficult to manufacture another pen. It is difficult to increase national production. It is difficult to increase output. Think about the other side of the equation. Either increase production or go back to the other side and tell me. Reducing the input of gold coin. Very good. Means what? You have 1 pen, 2 gold coins. Remove 1 gold coin. Remove 1 gold coin from the system. Now what is that? 1 coin equals 1 pen. You go back to your earlier situation. Now, unfortunately, the system has 2 gold coins. So what can we do? In a democratic system, I can't come to your house with a pistol in my hand and demand the excess money you have. So we have to mop up the excess money supply. Now that is the nice economic word. Mop up the excess money supply. How do I do that? I increase the interest rate. What is that? You have 2 gold coins. You have 1 pen. Now I am saying, if you give me the gold coin, you will get 24% return per annum. Now you look at that also. You keep one gold coin and hand over me that excess gold coin in return of 24%. And I give you, for giving me that gold coin, I'll issue a paper known as treasury bond. I'll just give you a piece of paper, keep it in your locker, and hand over me that excess money. When I increase money supply, that's what happened. You hand over your excess money, and I mop up the liquidity in the market. Now the money supply goes down. Now the production is the same, and I have curbed inflation. Okay. Now something terrible has happened during that time. You have one gold coin. You have one gold coin. The excess one, it's in my locker. You have a piece of paper which you cannot trade. So you have only one gold coin. Money supply has reduced. You have one pen and price stability is there. Very happy. But unfortunately, the manufacturers have somehow found a new technology. Now they have manufactured two pens. 2 pence against one gold coin. 2 pence against one gold coin. What is the price of a pen now? One pen against 2 gold coins. Very good. It has half. 0.5, 50 cents. What was 1 rupee is priced now 50 cents. Price has come down. What do you call that? When you say price goes up, you said inflation. Now price has come down. What do you call it? Deflation. Very good. Deflation. We really love to hear that prices are coming down. So during Christmas, we are extremely happy to see the sales. 50% slashed, 20% discount. Extremely happy. Okay. What's wrong with deflation? Is price continuously coming down? Is it good for economy? Say yes or no. We always talked about inflation. Now the price is coming down, and very good, very good. Price is coming down is also not good. Right. Now what is happening? The manufacturer of pen who got 1 rupee earlier, 1 gold coin earlier, now find the price is coming down. That's from the manufacturer's end. I'm the buyer. Earlier, the pen which I purchased at 1, now I can, let's say 100 rupees. The pen which was 100 rupees 2 weeks ago can now be purchased at 50 rupees, 50% discount. At the same time, I come to know if I wait for another week, I can buy it further down at 25. When will I buy this pen? Now or next week? If I buy this pen now, it's 50. If I wait for 1 week, I can buy the same at 25. When can I buy it? When should I buy it? What is the ideal time for me to buy? Now or next week? Next week, next week. When next week comes, I come to know if I wait for another week, this will come down by another 50%, 1250, not 25. And it continues. Means what? The buyer is postponing the buying decision. When that's happening, manufacturers find it's difficult to sell the existing stock. So deflation is also unhealthy. Okay. Now, to curb this situation, right now we have 2 pen, 1 gold coin in the locker. Right? Now you go back to your ideal situation. What is that? 1 gold coin equals 1 pen. What can you do now? What can you do now? You want to go back to your earlier situation. That is, now you have 2 pen. Very good. Very good. Earlier I promised to give you 24%. Now I'm saying you, okay, I'll give you only 5%. You who was extremely happy at 24% kept a piece of paper in your locker and handed over me that excess money. Now, when I say hereafter I'm offering you 5%, you are not happy. Now, what you do? You take again this piece of, you hand over this piece of paper back to me and take money from me. Now the system has 2 gold coin, 2 pen. Now the price has gone to the earlier situation, price stability. That activity, which is called increasing and reducing interest rate in order to curb inflation, we call it OMO, or open market operations. Right, let's get back to our cue. The primary dealers, to make primary dealers an effective conduit for conducting open market operations. Primary dealers can be effectively used as a pipeline to do this open market operation. Increase the interest rate, mop up the excess money, and when the money supply is not sufficient, when you compare that with the national output, you have to inject money. For that, you are using interest rate. That is done through primary dealers. So primary dealers become an effective conduit for open market operations. Primary dealers should maintain adequate physical infrastructure and skilled manpower for efficient participation in primary issues, trading in the secondary market, and to advise and educate the investors. Okay, so primary dealers must have the right set of people to do their job. A primary dealer shall have an efficient internal control system for fair conduct of business, settlement of trades, and maintenance of accounts. Okay. At the beginning, we talked about Raj Ratnam. Was he doing a fair trading? Say yes or no. Is it a fair trading which Raj Ratnam did? No. No. So some people become extremely rich out of investing because they have the grab of secret information which the general public is not aware. So general public will burn their fingers like the cat paw, and the monkeys will get the fruits. That system is unfair. So there must be fair trading where everyone gets information equally. So the primary dealers shall have an efficient internal control system. There must be superb internal control system to look into these. Now, we said primary dealers are buying government securities. That's huge amounts, billions, trillions, zillions. Who is funding them? Now, the primary dealers must have a funding sources. What is that? Equity, your own money, retained earnings, out of the profit what you have not taken out. Borrowings in the call money market, repo borrowings. Last week we talked about repurchase agreements, bank borrowings. Now these are the ways of getting money to primary dealers. For exam purpose, remember this seriously. And during election time, we normally hear a nice term, bond scam. And that's another nice story. Okay. In Sri Lanka, all of a sudden, we came to hear this as a rumor. Then there was JVP who pointed it out, this bond scam. Then it became a huge issue. And by that time, Prime Minister was Ranil Wickremesinghe. He appointed an independent committee. The independent committee cleared off all the parties accused, and everything was smooth. All of a sudden, then the president, Maithripala Sirisena, His Excellency, had a problem with the Prime Minister. He appointed a presidential commission to inquire about this bond scam, which was cleared by, not by a legal entity, but by a panel appointed by Prime Minister. And all of a sudden, we started to read newspapers, 1-page, 2-page articles on bond scam, superb revelations of what is happening inside. Right. So they were using bank borrowings. The bank itself could buy government securities, but the same bank gave them loans to buy. Now, these are the issues. If you don't have fair conduct of business, someone will become extremely rich, like Rothschilds in UK. They manipulated information as much as possible. The information which government should only have, they had access. And they made themselves extremely rich in 5 European nations. Google and check the houses they built. The sons who are living in slum houses, look at how rich they became thanks to this job, primary dealing. So in Sri Lanka, for the very first time, we were hearing these. And if you go back, you can see how unfair trading took place in this bond scam issue. Okay. So remember the funding sources: equity, retained earnings, borrowings, 3 types: call money, repo, bank. Now, who is the regulator of primary dealers? Now, those days you came up with nice news alerts. Perpetual Capital license was suspended to 6 months by CBSL. Means what? CBSL, Central Bank of Sri Lanka, is the regulator of primary dealer. Okay, so there were regulatory activities done by CBSL, like suspending and cancelling the license. Remember, every tiger must have teeth. If you don't have teeth, you are no more a tiger. Right? Every regulator appoint the agent, and they have the right to suspend or cancel the license which they offered. Right? Those who can offer something can remove it. That is the power the offerer is having. In the same manner, CBSL can issue the license to become a primary dealer, suspend the license, or even cancel the license. Now, the regulator role, appointment. Now, that's again a little bit politics. Maithripala Sirisena, the president, appointed the prime minister, Ranil Wickremesinghe. You can remember, on the very first day he took oath as the president, immediately prime minister ran up to him with a piece of paper and he read something and he became the prime minister. And after some time they had problems and the president removed prime minister. He who appointed the agent now removed the agent. The agent went to courts and the decision was very clear. After 19th Amendment, president cannot remove prime minister. So you can only offer, you can't remove. Tiger willingly has taken out teeth. That is not happening in any regulator. Okay? So look into the role of any regulator. First, you issue the dealer. Appointment of primary dealers. You give the appointment. Issuing of prudential directions and determinations under the laws. Off-site and on-site examinations of primary dealers and the enforcement of regulatory actions, including the suspension and cancellation of the appointment of primary dealers for non-compliance with the laws. Okay. So all the regulators show they have the power to appoint and they have the power to suspend or cancel. Now that is the power all regulators are enjoying. That we give you certain set of rules and regulations and directions to comply. If you fail to do that, we can remove your license. Okay. So the only tiger that gave up its teeth is our own presidency. All the others, they appoint, suspend, cancel. Now, for exam purpose, if you asked about any regulator, be it SEC, be it IBSL, CBSL, In that respective area, they have the power to appoint and they have the power to cancel the given appointment or to suspend it. Right. So appoint it. Then you issue prudential directions, determinations, rules, regulations. Follow them. If you are in the business, follow them. Then you send your officers to their sites, to the company premises, on-site examinations. So they come to your office and sit in an allocated area, and they summon you, ask you information, provide me that. If you fail to do that, they look at whether you comply with the rules and regulations given. If you fail to comply, the serious things, if there are serious malpractices, non-compliance, they can suspend until you comply that or cancel it. The supervision of primary dealers is carried out to ensure an efficient, sound and safe primary dealer system to promote the stability of the government securities market and to safeguard the interest of investors. Yes, very few are given this license to buy from the primary market. Of course, they can make a profit, that is their business. But if you remove all the others and try to create a monopoly, which is unhealthy for the government, on such, you must be able to take actions and to protect the great number of investors. So in your leisure time, you can go through this bond scam in Sri Lanka and look at how things take place. So there are large buyers like EPF, ETF, they buy government securities from primary dealers, how that take place. If you want, yes, you can read these presidential commission reports published in national newspapers and come to know a little bit about how the activity takes place. The main directions issued to primary dealers cover, okay. Now, later on we may look into the rules, determinations, regulations issued by CBSL on finance companies. We'll have a lengthy discussion on that. In the same manner, these directions are issued by central bank on primary dealers. So they cover these issues like minimum capital requirement, how much your own money you had put, capital adequacy. All of a sudden, there may be shock absorbing situations. So capital adequacy is required to meet the unexpected situations. Reserves must be kept. So special risk reserves. Segregation of securities accounts, custodian holdings of security, market valuation, repo agreements, forward rate agreements, and interest rate swaps. We'll talk about swaps later. Financial statement and dividend declaration and diversification. All these areas are covered by directions. Now the regulator is an independent body. They know how a profit-making entity will behave. Most of the time, profit-making entity only see short-term profits. Sometimes, when you focus only on short-term profits, that itself will damage your own business. Okay? When there is a bubble taking place, the investors only look at short-term profit and get into market. But they don't see that bubble is ready to burst because they only see the profit. But an independent party who is watching from far away would see, no, it's not going to be a permanent thing and the bubble will burst. We have ample examples. One is petroleum price in 2008. When the oil price was escalating, a lot of economists wrote nice articles and said the middle class of China and India have grown up to such a level that their demand for vehicles is this much. Now they travel throughout the world and oil price is going to remain at this highest level forever. But within a couple of weeks, the oil price crashed. But by that time, we have hedged, and we had to make losses. Okay. So this is the problem of short-term, profit-oriented mentality. Someone far away, an independent party, would see the issues. When you see the stock market is going up, you prefer to even mortgage your house and buy shares, believing it will double so you can have two houses next. But sometimes you will end up losing even the same single house you have. Someone outside would see, no, it's a bubble. Well, soon that will burst. The public debt department supervises authorized primary dealer through off-site surveillance and on-site examinations. Okay, so there are departments like NBFI supervision department. Okay, these departments will come to your office, sit in the premises, ask documents from you, evaluate them. That is on-site supervision. Sometimes even without coming to your premises, they may ask you to mail this information, that information. Off-site surveillance. They need not to come to your place. That is off-site. So that both of these are used by the regulator. Off-site, on-site. Regularized meetings as well as one-to-one discussions are held with primary dealers to exchange views and to institute remedial measures. So these are the businesses that will end up in super profits. And if so, the participants may naturally want to increase their profit by moving into unethical practices, which is not good for the economy, not good for the greater majority. On such, the regulator will intervene and have these ways of monitoring you. In addition, CBSL has issued a code of conduct for primary dealers to promote best practices in the conduct of trading, and compliance is monitored. Okay. So CBSL has given a code of best practices. Okay. When you are in profitable entities, there is a probability of misbehaving. Therefore, you are given a code of practices, code of conduct. This is how you must do your trading. And that is something you are expected to follow. Causes of collapsing primary dealers. Okay. Can someone tell me primary dealers that collapsed in Sri Lanka? Their name got tarnished, and in newspapers they were attacked, and they could not pay, and they collapsed. Can you tell me one or two such entity? Perpetual treasuries, that is one. Very good. There was another one. Okay, that was another primary dealer. Okay. Tell me another one. There was another one called Entrust Securities. That was a listed company, and that collapsed. Okay. Now we look into that aspect. Causes of collapsing of primary dealers. Remember, most of the big companies, if they are not regulated, if they don't have a proper way of behaving, they will misbehave, mismanage, and fail. Okay. Yeah. Now, when you think about these failed companies, Golden Key is one such. Yes. Even in the world, there were many good companies, well respected companies that collapsed. Some of them were banks. I'll give you a name of a film for you to watch. Okay. So that was about collapsing of UK bank, Barring Bank. So Barring Bank collapsed just because of misbehavior of one single individual, Nick Leeson, trader. Just he was not monitored, and that was the end of the bank. Okay. Causes of collapsing of primary dealers. Now that applies to even banks, so any company. Non-compliance with regulations, misappropriation of funds, fraud and mismanagement. Right. Let me just talk about this movie, Rogue Trader. In this movie, it shows chairman interviews a young guy, and this young guy comes to the final interview with a plaster on his nose. The chairman asks, "You have come to this interview wearing a plaster on your nose. Why and what happened to you?" He said, "Yesterday I went to a nightclub, had a problem there. I was a little bit drunk, and we had a quarrel, and this is the result." Chairman happily recruit him. Okay. Chairman believes in one thing: we at Barring Bank has been recruiting the same kind of people, those who have good graduations, those who come in with good family background, those who are very conservative, and naturally, our bank is very conservative. But the world is changing. We need smart, different young people. So Nick Leeson was the chairman's choice. And chairman looked after this young guy to prove that his thinking is right. He was first given a chance to work in Indonesia, and those days Indonesia found oil, they were booming up. Next, he was sent to Singapore. Singapore is going to be the next economic hub. Singapore, the rules are very strict. He goes to a nightclub, had a problem, and he was even prisoned. Means what? It is the same guy, Nick Leeson. He has not changed, misbehaving in social life as well. But chairman very carefully looked after him. Very soon, the Singapore economy is booming up. They were trading in the Singapore Stock Exchange, and very soon they came up with a superb finding. 1/3 of the profit of this bank, 200 years old bank, comes from one single unit handled by Nick Leeson. Chairman was very happy. Look at the performance of the guy I selected. Auditors came to audit the Singapore operation handled by Nick Leeson. They were having some problems. Instead of clients, codes were given. Why have you put codes? Not client's name. But he called to the chairman. "Chairman, I don't like how the way I'm audited." Chairman immediately called the audit team to come back. 3 times, auditors were taken back by the chairman. And Nick Leeson was enjoying 1/3 profit contribution to the bank. In this movie, Nick Leeson moves out to Malaysia on a vacation, and he was just reading the newspaper. All of a sudden, something attracts his eyes. Barring Bank has collapsed now during his vacation, and the culprit is Nick Leeson. He was very much afraid. Instead of going to London, he went to Frankfurt. At Frankfurt, he was caught. He was arrested and taken to London. He used to trade wearing a different colored coat. That coat, his personal coat, was auctioned, and they got a good amount for that. But the Barring Bank was sold to Deutsche Bank for £1. collapse back. Okay. So throughout the world, whatever your industry, these issues will ensure your failure. Non-compliance with the regulations. A lot of rules and regulations are there to follow. And these rules and regulations are there to be followed because of a justifiable reason. If you fail to do that, you will definitely collapse. Misappropriation of funds. At banks, insurance companies, whatever you call financial intermediaries, we are playing with others' money. Misappropriation, fraud and mismanagement. Have you heard about a company by the name of this in the chat box? Say yes or no. Okay. Right. So Enron was a #1 listed company in US. Kenneth Lay was the CEO of this company. Okay. They were running oil-related business. That was the initial. And very soon, they came up with a nice finding in financial accounting. When you are researching for the oil drill, it may take years, and you are just making expenditure. But all of a sudden, when you find oil, you make huge profits. So there are certain provisions in the financial system, like mark to market, and they used to manipulate them. Very soon, they came up with superb profits in their financial statements, but they prefer not to publish cash flow statements. They don't like cash flow statements, but they make superb profit. And they were researching in different areas, like even in India, the oil. And they were having a lot of power plants. California alone, they were the huge power supply. And they were negotiating with the municipal council to increase the rate of power supply. Since there were delays, since the mayor was not in favor, this all of a sudden had power interruptions. The mayor was so upset, he said, I'll send a team to investigate Enron power plants and check whether this is done deliberately. Enrons were very powerful. They had enough money. And they finally, in the next election, they backed a guy called Arnold Schwarzenegger against the mayor. And Arnold, the bodybuilder, won, thanks to Enron's money. And everyone is purchasing Enron share because they are always increasing profits. And the share price is continuously going up. And they were, the top team were very interested in risky, adventurous games like racing cars. That shows they are not conservatives. In one particular time, a journalist asked in detail about the cash flow statements. He was reprimanded, and the journalist didn't give up. He started to dig into the real performance of Enron. And very soon, Arthur Andersen, the audit firm, found guilty. And they even burned down most of the audited documents. Within a couple of months, Enron, a huge company, collapsed. Okay. So when you have unnecessary power in corporate world also, you will tend to misappropriate, frauds, mismanagement. All these made Enron collapse. Now, in your leisure time, just look at the chat box. Today we talked about a movie, Enron. Okay. Anything else? Yeah, Rothschilds. Okay. In your leisure time, just get into Google and check about them. So there is a movie you can enjoy, and you can look into even Rajaratnam, the book. If you are interested in reading books, you can find that and read. Okay. Then Enron, there are documentary movies. You can see how they were mismanaging. Okay. So all of them are very good lessons. Now don't believe Sri Lanka is bad, America is good. No, everywhere human beings behave in similar patterns. Okay. So just look at, now don't say only in Sri Lanka these ETI collapse and the ETI directors are arrested and this mismanagement only takes place in Sri Lanka. No, that's not. Okay. Whenever you happen to play with others' money, there's a tendency to misappropriate. That's why you should be highly regulated. So there must be an independent regulator. For primary dealers, they also play with a lot of money. So there are a lot of chances of frauds, mismanagements, misappropriation, non-compliance, and all of them will end up in collapsing of primary dealers. So it has taken place not only in Sri Lanka, in many other countries. Primary dealer. The regulatory and supervisory framework for primary dealers in government securities is specified by the regulations issued under the Local Treasury Bills Ordinance and the Registered Stock and Securities Ordinance. With effect from 2016, Departments of Supervision of NBFI is responsible for supervising primary dealers. Okay, so now the Department of Supervision of NBFIs is responsible for supervising primary dealers as well. The same looking after finance companies. These are the two categories of institutions that are eligible to authorized primary dealers, either licensed commercial banks or dedicated primary dealer companies. Licensed commercial banks have other businesses to do. While doing that, they can do primary activities when they have this license obtained for doing primary dealer activities. Dedicated primary dealer companies, they are not banks, they don't have any other activity, but like what you said, perpetual treasuries. Their business is dedicated, fully dedicated to primary dealer job. Now these are some of the primary dealers. Bank of Ceylon, Capital Alliance, Commercial Bank, First Capital, that is a listed company in Colombo Stock Exchange by the name of CFVF, Equity Securities, Equity Partners, that's a collaboration of two banks, NetWealth, NSB Fund Management. So they are the primary dealers. People's Bank, Sampath Bank, Ceylon, Wealth Trust, Union Bank. So some of them are commercial banks, some of them are dedicated primary dealers. Now about government securities. We said they are buying government securities. Primary dealers buy government securities. So what are they? If a security gets matured within 1 year, we call them short term. So treasury bill is a short term one. Then you have long term one, more than 1 year. Treasury bond, rupee loan, Sri Lanka development bonds. Treasury bill, they mature in 91 days, 182 days, or 364 days without any interest, but issued at a discount. Okay. When you think about fixed deposit, if you deposit 5 million, the value of the fixed deposit printed is 5 million. Okay. Then the interest is accumulated upon it. But when it comes to these, it's printed on a face value, but you buy at a discount. So if it's printed 5 million, you are not buying it at 5 million, but on a discounted value. So they are issued at a discount. So that is the coupons they get. If the security is held till maturity, the profit would be difference between the purchase price and the redemption price. and in Sri Lanka, the treasury bills are issued in Sri Lankan rupees. In real today, you don't get a paper, but scriptless one, a number. Benefits of treasury bills. Minimum risk, since it is issued and guaranteed by the government. Government is the owner of the print of cash. So they need not to default. There's a guarantee. So the risk is minimum. No other institute can give that guarantee. High liquidity, since it can be traded in the secondary market. Liquidity is very high. Joint investments can be made. No taxation and stamp duty. Transactions can be done swiftly from the CDS, Centralized Depository System. Treasury bonds. Now, treasury bills is less than 1 year. Treasury bonds, it is definitely more than 1 year. So that is long term, 2 to 20 years. Fixed interest government security. It is issued in Sri Lankan rupees. There are two types issued by government of Sri Lanka. Conventional, inflation linked. Sorry, the tenor is 2 to 20 years. Fixed and semi-annual coupon. Now, coupon means interest. Payments are made. Inflation, tenor is 3 years. Semi-annual coupon, based on the consumer price index. Once again, the benefits. Minimum risk, because it's guaranteed by the government. Liquidity is very high because it can be traded in the secondary market. No withholding tax. Receiving regular interest payments. Capital gains can be achieved. So the difference between purchasing and selling is your capital gain. Then there can be rupee loans, 2 to 30 years, government security. Development bonds, once again 2 to 3 years. It is issued in US dollar terms. Now the benefits of development bonds, once again guaranteed by government, no risk, liquidity because of secondary market, and tax-free in the rest. No exchange rate because it is denominated in US dollars. Now about entrust securities, something that collapsed in Sri Lanka. So this is how the economy next talked about it. Year 2017, Sri Lanka's entrust securities, a primary dealer in government securities. Okay. So that company collapsed. In addition to what you talked about perpetual treasuries, that's entrust securities. Okay. So we talked about primary dealers. In one simple term, what is meant by primary dealer? Who is a primary dealer? One simple term, market maker for government securities. Okay, so these are the exam questions. Who is a primary dealer? Market maker for government securities. What are the sources of funds of primary dealer? What are the who is the regulator of primary dealers? What are the functions and duties and responsibilities of primary dealers? Okay. And what are the securities primary dealers buy? So likewise, you can be asked questions. Okay. Now, we talked about many different areas by now. Next week, you will have a, I would say I'm having a revision that day, that time. So we'll have a day off next week. So on 23rd, you will not have this class. Okay. Right. Now we'll talk in general. We talked about the regulator, right? Regulator is trying to protect the general public from manipulation. Regulator versus manipulator. Right. This is something very interesting. Regulator sets a certain set of rules and say follow them. What do you think manipulator is doing? The regulator want to protect the general public. Okay? Therefore, they put set of rules and regulations and say follow them, comply with them. If not, you will be punished. Your license will be cancelled. A great number of good participants follow that. But there are manipulators who are extremely smart. Okay? What do they do? Do you think they will openly break the rules and regulations? Say yes or no. Manipulators, do they challenge the regulator and openly break the rules? Right. Now, I'll tell you some examples in our Colombo Stock Exchange. Right. In 2011, we were the second best performer, and all of a sudden, shares which have no fundamental value at all, like Lanka Cement, all of a sudden started to escalate. Then immediately trading of that shares stopped, and the management is asked to cite any worthwhile reasons for this sudden escalation of price, and the letter is published immediately. Lanka Cement price went back to the earlier situation. Okay, but certain shares flew like rockets. Greg is one such. Blue Diamonds is another. Okay. And certain shares, like they were not bad companies, but they were manipulated by certain manipulators. I'm not saying they are non-performance. No, let's say the Ankoto Porcelain, that's a good company. But the share price was escalated. Most of these manipulators first look at illiquid shares. What do you mean by illiquid? What do you mean by illiquid? Liquid, illiquid, these terms you have heard.
Can't sell the shares. It means cannot make it cash.
Yeah, illiquid
Easily.
means, yeah, you cannot easily convert them into cash without making losses. That is illiquid. So assets are illiquid. But certain shares are very liquid. For example, most of the foreign investors, they prefer liquid shares. The shares like John Keel's, Commercial Bank, Dialogue, these shares are very liquid. Means what? In the market, you can at any given time purchase a good quantity and sell a good quantity. But illiquid shares, the owners own more than 75%. So the market has less available number of shares. So the manipulators were looking at illiquid shares, and they accumulate as much as possible and increase the price and sell it, and they disappear. You call that strategy pump and dump. Right? All of a sudden, shares started to escalate, pump up, and the manipulators dump into the general public at an extremely high price and get out of the market. And after sometimes they select another share, pump it, sell it to unknown general public and vanish with a huge profit. Right. Now, before coming into 2011 price bands, which was introduced by the regulator, let me tell you a story about a farmer. Right. As per the beliefs of horoscope believers, people get into certain dasas, certain time spaces, and they believe planetary positions control them. So Saturn is believed to be giving you worst time. Okay, so everyone in his lifetime, may, as per the horoscope believers, may come into certain period where sun is controlling them, then move into an area where moon is controlling them, then the Jupiter is controlling. That's their belief. Okay? So in this particular story, Saturn became the planetary position of a farmer, and Saturn is said to be a bad person. So Saturn appeared in front of the farmer and said, whatever you cultivate, you, Mr. Vegetable Farmer, will not bear fruits. Whatever you cultivate, Mr. Vegetable Farmer, will not bear fruits. So that's a bad signal for him. But this farmer cultivated sweet potatoes. No fruits required, just the potatoes, sweet potatoes. And he made a good profit out of that. Okay. Next time, the Saturn appeared in front of him. Normally, the Saturn dasa is a long period, and said, this time, whatever you cultivate, you will not get either fruits or potatoes. This time, farmer cultivated green leaves, kangkung, and he made a good profit out of that. And after that, Saturn appeared again and said, whatever you cultivate, you will not be able to sell either fruits, potatoes, or leaves. This time, he cultivated bamboo and sold the wood. Now, the last chance for the Saturn, he said, Mr. Farmer, whatever you cultivate this time, you will not be able to sell potatoes, fruits, leaves, or wood. In addition to that, I will ensure you will not get much of sunlight during this tenure. Okay, the farmer won that time also. What do you think he planted this time? He planted mushroom. Okay, now means what? The regulator is putting terms and conditions to comply with, and the manipulator will always find a loophole and make profit. Okay, so this is the story to show how it is difficult to put rules and regulations, because the manipulators are often smarter. Okay, they don't openly break the rules. If that is done, you can be taken to courts. Right. Now, when Saturn says it will not bear fruits, the manipulator will not plant that. Okay. Now, let's link that to stock exchanges. That can be linked to any area where rules and regulations are there. In 2011, certain shares were pumped up and dumped, and a greater number of individual retailers burned their hands. This is not a good thing for a stock exchange. Why? Now, my question is, why manipulation is bad in a stock exchange? You can tell me, think and write your answers. After that, we'll talk about price bands. Why manipulation is bad in a stock exchange? Think and write me something. I'll give you 3 to 4 minutes. Yeah, why manipulation is bad in a stock exchange? Okay. Think and tell me, think and write me something. So after 4 minutes, we'll again start discussing on that. Yes. Now, when the manipulation takes place, the retailers find that they're fooled in the market. So they believe market is not a place to invest. It's a gambling den, and they prefer not to look at the market. The problem is when the general public lose confidence in investments, they don't subscribe to IPOs or rights issues, and that will be a problem to those who seek capital to expand their businesses. Therefore, manipulations should be detected and removed. So that is the duty of the regulator. Okay. It will create a negative, unfavorable attitude, yes, among the general public. If the trust is lost, then shares will become illiquid, yes. If so, the general public will not be interested in subscribing for rights and IPOs. The capital market will dry out. So these are the negative things. Okay, in 2011, there were certain shares pumped and dumped. For an example, People's Merchant Bank share was trading at 30 rupees when the stock market started trading at 9:30. By 10:30, it has reached 60. Means what? If you have purchased People's Merchant Bank share by 9:30 today, after 1 hour, you have doubled your investment. And the quantity was extremely high. By 12:30, that was trading at 90 plus. Means what? 300% return within 1 day. Okay. And the rumor was one large investor is buying these shares. But when the quarter report came, that investor's name is not even in the top 20 list. Means what? Someone has pumped and dumped the share to the market. Some huge investor has purchased at 30 the maximum quantity, cleared it up and sold to the general public at 90 and made 3 times of the investment and vanished. Now these activities will make it bad for capital market growth. General public will lose confidence. Therefore, SEC came with a very creative formula. Price band means what? A particular share cannot increase more than 10% per day. Now, if you buy something 30, the maximum it can increase per day is 33. Just 10% per day. But earlier, you buy at 30, and within a couple of hours, it has reached 90, 300%, 400%, 500% gain within a day. That's absurd. That cannot happen. So they came up with a very good suggestion. A share can either go up or down only by 10% per day. When that was activated, some of highly escalated share prices like Dankotu Porcelain, some others came down, Blue Diamond, some others came down slowly. So the price band will be there for continuously 10 days. After that, price band will be removed. And by that time, the price of that share really represent something valuable, either upward or downward, but not in pump and dump style. Okay. But after some time, there was a share called East-West. East-West. This company share was trading at 10 rupees. And it has gone to, let's say, 15 rupees when the price band was imposed. When all the other shares fell down, it remained constant. And after that, the share price was escalated by 10% each day. If it's 15, at the end of the day, 16.5. Means what? The manipulation was done in such a manner, you find lot of buying orders at 16.50. And everyone who want to sell matched the selling order and sold at 16.50. And the rest who was ready to sell thought, it seems there's a huge demand for this share and I will wait tomorrow. When that tomorrow comes, another 10% up, then huge buying orders and sellers get discouraged. Each day it ran up 10%. Meanwhile, the company itself declared a dividend, 50 cents dividend. And when the price band was removed, still it went up. Okay. But that was the only time this company declared a dividend. Okay. So manipulators also find certain loopholes. When price band believed to control the move, they made it ensure, yes, you can definitely increase it 10% each day. And they did it. So this is why it's extremely difficult to control manipulations. But the regulator always try to regulate and ensure malpractices are removed. Manipulator, on the other hand, try new ways and the regulator impose new restrictions. So the rules, determinations, and whatever we have to comply, they are always amended to absorb more areas. Okay. Then another share. Today, I'll take time to describe some of these practical examples. There was another share. Beck. That was a share trading around 10 rupees, and the company is not a good performing one. All of a sudden, a foreign party was interested in, they started buying, and the share price went up, say 60. And we have a tendency, when a foreigner is buying, we believe That's a good company. Right? We don't think that foreigners can also be good and bad, but we believe when a foreigner is buying, the share price will naturally go up. And it went up to 120. Okay? And by that time, a lot of news articles were there. Okay, this new buyer is having platinum plants in South Africa, huge investors, so many other things. And they came up with another option, warrants. For the very first time, we came up with a new product, warrants. Okay. So if you have great shares, after 5 years, you can buy further shares at this value. After 2 years, you can buy further shares at this value. It's not a right. Right is quickly, within a month, maximum within a month, you have to subscribe. Here, long maturity period. And the company now sells warrants to the general public. And they went out of the market, making a good amount of money. Okay, you can pump up the share price and disappear. Okay, I'll tell you another nice story from that end for you to understand what is pump and dump, what is meant by pump and dump. Okay, now 2 foreigners came to Dambulla. This is a story told in stock market. I'll match it to Sri Lankan conditions and make it like a Sri Lankan one. Okay, 2 foreigners came to Dambulla, went to the Three-Wheel Park and said, we want to rent out a house with a large garden. So foreigners know Three-Wheel Park is the best place where you can get information, and they will work on commission. And it happened. They found a very good location with a good house and a large garden. And they immediately put up cages in this garden. Then these 2 foreigners came to Dambulla, to the Three-Wheel Park again, and said, we are going to buy monkeys. When you go to Dambulla, you will find a lot of rilau, a species of monkeys moving here and there. And for each animal, we'll pay you 50,000. They were very happy. Now the Three-Wheel Park guys, instead of looking into hiring, they started catching up monkeys and handing over to the 2 foreigners. They will readily pay 50,000 rupees each animal, and they cage them. And after some time, there is no supply, no further animals. Now the 2 foreigners come to the Three-Wheel Park and say, we need more animals. And they said, no, we don't see any animal nearby. Even if they see us now they move out, they run away. Now they live only in tall trees in forests. Okay, we'll pay you 100,000 each. You bring any new one. Now this time they went even to jungles, catch monkeys, hand over, and they are paid 100,000 instantly. And after 1 or 3 days, no more supply of these animals. They came up and said, we need more. Then they said, no sir, we don't have anyone, not a monkey, living anywhere other than in your cages. Now the market is illiquid, no further supply. You have absorbed all the excess, illiquid. That moment, 1 foreigner leaves the house, get into an intercity bus and goes out. Now the Three-Wheel guys are watching very carefully what is happening, like the investors. We have invested, okay, we have sold, now we are looking at, okay. And the remaining foreigner comes to the Three-Wheel Park, talk to his favorite Three-Wheel guy secretly and say, my friend today went to Colombo, a ship is arriving today, and do you know that we are going to sell each animal for 500,000. Bring me any animal, I'll pay you 250,000. The Three-Wheel guy says, no sir, believe me, other than or any animal living in your cage, we don't have anyone. No one even in the forest. Then the foreigner secretly give him a signal. I am the guy who keeps records, accounts. My friend is not having such information. He went to Colombo and the ship is coming. Since you have been very helpful to me, I'll give you a monkey. Buy it from me at 150,000. When he comes back, sell it back to us at 250,000. Then the three-wheel guy immediately pawn his chain, take loans, and buy one monkey from the cage at 150,000. Okay, so the foreigner who purchased at 50 or 100,000 sold the same to 150,000 for the local. And when others see he's having monkey, they become very interesting. Okay, why? What happened? Then he tell his story. Now others also want to make a killing now. You buy at 150,000 and you can sell at 250,000 within a couple of days. Everyone is interested. Everyone is taking loans and flocking around the foreigner, and he's selling one by one at 150,000. Now, the foreigner has very few monkeys. All others were purchased by the villagers. Very next day, now they are coming to the rented house to sell the monkeys at 250,000. They found the remaining foreigner has also disappeared. Okay, so this is pump and dump. First, you make it illiquid, buy as much as possible, even by escalating the price a little bit high. Then you show that you have a genuine interest to buy every share available in the market. Then whatever you simply release to the market will absorb it at a very high price. Then you disappear by selling as much as possible and make a huge profit out of your pump and dump strategy. Okay, so this story summarizes what is happening in pump and dump. Okay, now the villagers who purchased monkey at 150,000, they had no other option. If they have purchased a cow, even at a slightly higher price, you will get milk. If you have purchased maybe some other animal like goat, still you will make some kind of income. Means what? If you purchase a company share which is paying you dividend like the milk, at least you get something. But these manipulators always select useless animals and sell it back to you and disappear. In the share market, they will select companies which are illiquid and are almost non-performing, like Lanka Cement, or like dead companies, namesake companies who are not well managed. They don't have any interest in managing the company, but their only interest is selling it back to you, pump and dump. Now, when this kind of things happen, people are no more interested in offering anything for farm animals. So this is why there must be a regulator. Okay, so today we took time very leisurely to give an understanding of market manipulations and how things happen with nice practical stories. At the same time, I told you a lot of things where you may study on your own. Let's say Enron company, how they started, what happened to their accounting practices, auditing, and how they behaved in the market, how they became so influential even to appoint a mayor by facing elections, a lot of things. These are very important. We will develop a company, and in NBFI sector and in banking sector, we are playing others' money. And there are rules and regulations which you have to definitely comply, and if you don't do that, your company will collapse. But still, some manipulations take place. The regulators amend and look into new areas. The manipulators continue doing the same. But in order to have a very good, healthy environment, healthy economy, the rules and regulations must be there. Okay. So take your time. Next week, you don't have classes. And after that, once again, you will have class in the same time. Next week, take your time and look at some of these things which I mentioned, like Enron. Go to a documentary movie, check about it. Just Wikipedia on Rothschilds. Okay. Then watch this movie. That will help when we talk about corporate governance. Companies should be there. We looked at the products which the companies are offering. Now, after we talk about few other company products like leasing, then gold pawning, cooperative societies, microfinance. Next, we have to look at corporate governance. Okay. Then we can directly move into exam-related questions and answers. Now, take your time to study what we have so far discussed: insurance, venture capital, unit trust, stocks, and today primary dealers. Okay. Take your time, read them from next week onwards. After next week, I'll ask questions from the past areas while adding a few more things in future. With that, I'll end today's session. Thank you.
Sir, I have a small question.
Yes.
Yeah, can I ask you with regards to actually if we are investing on unit trust, so how can we find the references? I just wanted to know because we shared the notes with regards to units, right?
Now, unit trusts, if you are interested in buying units, first you can purchase a Daily Mirror paper. In Daily Mirror, and you will have a page on shares. In this particular page, there will be a lot of names of unit trusts available. Right? Then you can look into these companies. For an example, NDB Wealth Management. Then speak to them. Right? Then they will appoint a person to discuss with you. With that, you can start.
Thank you, sir.